Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Thursday. In today's program, I want to talk about how the US session has practically opened all in the red, and some kind of other breaking, interesting stories which is developing as well. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So let's start off with a story I covered briefly yesterday and a further development on that story, and that's to do with Apple. Now, as you know, yesterday I discussed that their latest iPhone 14 was not in so much demand as they had anticipated. And they have asked their suppliers not to increase production. The reason for this is that obviously there's a very strong dollar at the moment, which is making it more expensive for parts and things like this. But really the consumer demand is beginning to wane as well. Because of this, Bank of America has downgraded Apple's status to neutral from buy. The knock-on effect to this is their share price has fallen by 2.2% pre-open. Now, as I mentioned earlier on, like I said, that story yesterday is this the beginning of many other stories about to come out. And I think the knock-on effect is the market in general, like I said at the very beginning of this video, has opened very much in the red. It has actually opened a lot lower. The S&P, for example, is currently trading negative 2.37%. The tech, NASDAQ, currently trading at negative 3.05%. And the S30 currently trading at negative 1.91%. The question I have, and I don't think this is the case, because it's funny actually, today is the 29th of September. And 29th of September 2008 saw one of the biggest stock market crashes of all time. I remember it because I was in the industry at the time. The stock market back then fell by 777.68 points in a single day. And at the time, it was the biggest drop in history. Now, I'm not saying we're witnessing this at the moment. Yes, the market's very much in the red, and we'll have a look at it in the moment. But it does make me wonder. If the Bank of England hadn't intervened yesterday and calmed the market slightly and gave it a little bit of a relief rally, which of course is now diminished, would we have faced something similar? But anyway, let's have a quick look at the market at the time. So first up, this is Apple. As you can see, like I said, because of Bank of America's downgrade, because of the report they reported yesterday about the iPhone 14 not being in such demand as they had hoped, we're currently trading now at $143.51. Had a bad day yesterday. He's having an even worse day today. If you look at the S&P 500 as well, like I say, look at this drop. Currently trading at 3,629 points, and the NASDAQ currently trading at 11,143 points. So yes, the market has opened very much in the red. Obviously, this Apple story is not helping sentiment. Obviously, we had good initial claims, which we'll talk about in a minute. And as well as that, like I say, this Apple story, is it going to be one of many? Are we going to get more stories developing like this? And indeed, is the market also thinking we're having a repeat of the 29th of September 2008? I remember that day very well. In fact, when it happened, because I was a gold trader at the time, and it skyrocketed on the back of that crash. So I remember that day very, 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 very well. I was actually on a floor in the Philippines at the time. Not actually on the floor, but on a trading floor in the Philippines at the time. But yes, there we go. So very much bad day for the market so far. In other news, like I mentioned earlier on, US initial claims came in slightly better than anticipated, 193,000 versus 215,000 expected. Again, a very strong labor market. a very good, strong labor market, which means obviously the Fed is not going to lighten up. They're going to be aggressive. I keep saying this anyway. I don't know why the market keeps kidding itself that the Fed's going to be light and gentle with it. They keep telling us what they're going to do, how aggressive they're going to be. So there is no lighting up on that. And this, again, is just going to give more evidence that they will carry on and pull the trigger for more aggressive interest rate hikes. On other developments as well, also came out today. Germany CPI was announced at 10.9%. 10.9%. Double digits. So this the inflation crisis is really, really gripping the whole world. It really, really is. 10.9%, which is a shocking number. They also announced today a new 200 billion energy defense shield, an energy package to help the consumers in Germany. Similar in some ways, they're going to borrow quite a fair bit of money to do this. Similar in some ways to what the UK said, but even the Germans can't help but have a dig at the UK. Everybody seems to be having the dig at the UK. We have America, IMF, former Bank of England governor, and now we have the Germans also having a dig at the UK, saying we are not like the UK. We can basically handle this package a lot better than they can. On another news, before I go into the markets to look at currencies, there is rumors now that we might have another central bank intervene in the market. We've already had the BOJ intervened a couple of weeks ago. Bank of England intervened on the bond market yesterday, but now there is rumors that the Central Bank of the Republic of China may intervene against the recent depreciation of the yuan, because obviously it's under a lot of pressure. They basically have put a warning out saying, do not bet against it. Do not bet against it. So yeah, there is that strong rumor that now they might be the next central bank to intervene in the FX market. But anyway, let's have a quick look at the markets, how they stand. Look at currencies. So there we go. There's the Nasdaq, still under horrendous pressure. Obviously, this Apple story is not helping it anyway whatsoever. But anyway, let's have a quick look at currencies. The euro is slightly up for the day at the moment. Currently trading at 97.09736. The cable has had a little bit of a bounce back today as well. It managed to break through that key level I've been watching for a while, 1.0870. So a bit of relief there. I think this is going to be short-lived, but like I say, only time will tell. Currently trading at 1.0958. That 1.0870 now is in potentially a key support level. It's an area of interest potentially. Gold. Okay, gold is slightly down as well today. Had a good day yesterday. Currently trading at $1,647. Don't forget, bond yields have gone back up again as well. So this is damaging the yellow metal. But really, the news at the moment is all about the stock market. And so there we go. They say S&P again, 3,622 points. And really, it's the Nasdaq. Look at that, 11,110 points, and under a lot of pressure. In other things to come out soon in the next couple of days, or tomorrow, in fact, the last day of the week, of course, is UK GDP, which is going to be, I think, a potentially really big barn burner, especially like I just said. I don't think the sterling's recovery is going to be short-lived. I don't think that's going to help. And of course, EU CPI. How close can that be to the shocking German reading we had today? The European markets, as they stand, FTSE, all in the red, I'm afraid, negative 2.20%. DAX currently negative 2.24%. Eurostock 50 currently trading negative 2.40%. Don't forget, you can ask me questions anytime you wish, or simply say hello if you like. Or, show me your opinions. What do you think? Obviously, I don't think we're going to see. We're only like an hour into the US session, to be honest. We're only an hour into the US session. And I don't think we are going to really see the repeat of 29th of September 2008. We're just, I don't think we're going to see that, to be open. Because that crash was caused by the federal government, refusing to bail out some of the big banks. In the end, they did, but at the time on that day, they refused to do the bailout, and that's why the market crashed. But I don't think we're going to see something quite as dramatic as that But certainly we are looking at a pretty day in the red at the moment. A day in the red. Yes, it's S&P still at 3,625 points, practically wiping out all the gains it made yesterday. So there we go. There we go. Okay, don't forget, if you think of the question later, okay, you can put it in the comment section, either on YouTube or Facebook. I will see them, and I will reply to them next time I go live on air, which of course will be tomorrow at 8:30 a.m. UTC, and again, of course, at 2 p.m. UTC to do the US session. So please come and join me for that. Okay, if there is no questions, not a problem, not a problem. Like I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video and you've put up with me, give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.